Hello winners, I'm Mr. Blue and today I'm going to teach you how to read BTC charts with K-lines or candlesticks. Let's go! Now in order to do technical analysis using K-lines, we first have to understand the structure of the K-lines. Now a particular K-line has four key pieces of information: the highest price, the lowest price, the opening price, and the closing price. Now, if the opening price is higher than the closing price, it's a red K line. On the other hand, if the closing price is higher than the opening price, then it's a green K line. However, do note one thing. One K line can only represent short-term price up and down. It cannot represent a trend. In order to interpret a trend, we need to combine several such K-lines. That brings me to the second step on how to spot the trends. Now, if in a given chart you see the higher lows and the higher highs, that means it's an uptrend. On the other hand, if you see lower lows and lower highs, that means it's a downtrend. And then there's a third trend, which is called sideways. If you see the K-lines fluctuating within a fixed range, then it is called sideways. We say the market is going sideways. That's it, that's simple. Now with these three trends, you'll be able to tell the market direction at a single glance. Now, in the step 3, I'm going to teach you how to draw trend lines and then catch signals from those trend lines. Let's move on to the chart. Now, once you have spotted an uptrend, then you have to take the trend line tool and then connect the lows of the K lines to draw a trend line. So this is our trend line. We always draw the trend line below the trend if it's an uptrend. Now, similarly, once you have spotted the downtrend, we have to take the trend line tool and then this time connect the highs of the K lines to draw a trend line. So this, my friend, becomes the trend line. Now I'm going to teach you how to use these trend lines to find high probability trade setups. Now let's start with the continuation pattern. Continuation pattern occurs when the price bounces back right after hitting the trend line, and it bounces back in the direction of the pattern. So we must take a long position here. But in order to take a long position, we first have to confirm the trade. Now, to confirm the trade, we have to use something called stochastic RSI, which you can access from the indicator section. So once you have this stochastic RSI on your screen, you have to see whenever the price touches the trend line, you have to see the RSI. Where is the RSI? The RSI shows that it's in the oversold level. Now, we must wait for the RSI to enter into this bluish strip before we take a long position. And as soon as it enters this strip, we open a long position somewhere here. That's how you can use K-lines to spot the trends and then find trade setups. Now, this is just the surface that we have scratched. There is a lot more to this, a lot more information that we have to learn. So keep following me and I'll keep posting more such videos. Cheers.